What is going on in the Hawaii real estate market? Are we crashing? Are we flattening? Are we preparing to go to the moon like Bitcoin? Well, in this video, I'm gonna break down what we're seeing happening in the market, what some of my predictions are, and what you should do if you are a buyer seller currently in the Hawaii real estate market. So stick around to get all the details. See you on the other side. All right, guys, so like I mentioned in this video, we're gonna go over a market update, not only on some concepts, but what I see happening in the market and some of my predictions. But before we jump into that, if this is your first time here, let me quickly introduce myself. My name is Patrick Longley. I'm a licensed real estate agent out here in Hawaii and have been for nearly a decade, helping buyers, sellers, and investors with their real estate needs. If you have any questions or you wanna look into the crystal ball with me and figure out what we think is gonna happen in this real estate market, feel free to reach out to me. I got my contact information right here, or you can directly DM me on any of my social media platforms. So with that being said, let's jump into what's going on in December of 2024 in the Hawaii real estate market. So let's first jump onto my computer and take a look at some of the data points and then try to understand why the market is doing what it's doing. Okay guys, now let's take a look at what we're seeing happening in the real estate market, not only in the single family home, but also the condo market. So let's first start with the single family home market. When it comes to median sales price, we can see the median sales price has recovered from its bottom in February of 2024 at $1,020,000. And we can see that it has really started to bounce up, but is now starting to trade a little bit sideways. Now, my theory on that is essentially because of the election and seasonality. It's very normal that we see towards the end of the year, during the holidays, we don't see things flying off the shelf. People are kind of winding down and basically spending time with family. But I think you combine that with the election as well as interest rates, and that kind of shows us that we are trading a little bit sideways on the single family home market, but have recovered from that low of $1,020,000 in February of 2024. Now, if we look at days on market and look at the average days on market for single family homes, we can see that we're sitting at about 40 days, which again is quicker than what we were seeing basically at our peak of April of 2023 at 51 days. But this was really when interest rates were a lot higher than they are now. And people have gotten kind of used to it. And we once again have seen it kind of trade somewhat sideways for the last year here on days on market. Not too much has changed. And one thing that is very interesting is if we look at months of supply, we can see this common trend of it going up. Now, what does months of supply actually mean? What that means is that if you have 100 homes on the market, it's saying that it takes 3.5 months, 3.5 months for all of those units to be sold. Now, when you see it actually trending up, what it basically is saying is that homes are selling slower, or what's happening is more inventory is coming to the market. They're not selling right away. So it's taking longer for all of that inventory to be liquidated completely. And that's the common trend that we've been seeing, is that more inventory is coming to the market, maybe not a bunch, which we'll take a look at soon here, but we're seeing that they're not flying off the shelves. So it's taking longer to liquidate all of that inventory. Now, when we look at inventory, we have seen that it has increased. As you can see here, we're at about 885 homes on the market currently. When we actually go backwards to, basically a year from now, that's 780 homes compared to 885 homes. That's about 100 homes more. So it's not a huge amount because we don't have a bunch of inventory, but it is increasing, which is inevitably going to trigger prices to go flat or to slightly go down as there's more options for buyers. But you combine that with interest rates staying higher for longer, which is most likely what we're gonna see, then we're gonna see trading sideways for a little bit until interest rates start to come down and we see a lot of that inventory get sucked up. So now let's take those same concepts and see what's going on in the condo market. So in the condo market, we have seen it kind of go up, go down, and we have seen it somewhat trading somewhat sideways. Although we do see these peaks and valleys, if you actually look from the top of 550 being the highest median sales price in November of 2023 of 550, we can see that it went down slightly at a low of 520, but has rebounded back to 540. So it did take about a year, but it did just essentially trade sideways. Days on market, as you can see here, the quickest it was selling within the last year was 39 days, and we are now at 54 days. That's a pretty significant jump. Now, my anticipation of why that's happening is most likely because we are seeing that more inventory is coming to the market, giving buyers more options so they don't have to actually buy exactly what's available right then. They can actually have options. But additionally, I think it's also because of some of these HOA increases where we're seeing some people selling more properties because they're saying, hey, the HOAs are going up. I want to get this off my books. And also buyers maybe not actually jumping on these properties because they're saying, hey, the HOAs are going up. I'm not okay with that. You see the same common theme with months of supply, but way more. Instead of 3.5 for single family homes, it's 5.5, almost half of a year to get rid of all the condo inventory that is actually on the market to liquidate all of it. Again, I think that's being triggered not only by interest rates, but also because of the HOA increases. And again, we're seeing that common theme where the amount of condos has skyrocketed with the amount that's actually out on the market, with almost 1950, almost 2,000 units condos currently on the market in November of 2024. Now, the next thing we really want to focus on is interest rates. Are they going up or are they going down? As interest rates go down, we see more demand, more buyers coming to the table, pushing up prices. If interest rates go up, then we see that demand goes down and we see prices come down. Well, what we can see here is not only are we seeing more inventory come to the market, which should bring prices down, we are seeing that interest rates did pop up a little bit. They are starting to come down slightly, but not as fast as we were initially anticipating. So we have seen that kind of make the market trade flat. We have seen that slow down the market. But what I do see is opportunity for buyers here where they can actually get a pretty good deal on a property because sellers are getting antsy. They're seeing that other inventory is coming to the market, more competition's coming to the market, and there's not as many buyers out there right now because interest rates have popped up a bit. So I do see some opportunity for buyers. I think for sellers, you may want to wait a little bit till interest rates come down and we see the market start to trade up a little bit more. So let's summarize what we're actually seeing happening in the market. In a nutshell, we are seeing more inventories actually coming to the market. We are seeing that the market is trading flat to a certain extent. Not as many buyers are coming to the table and pushing prices up. We're actually seeing lots of opportunities for buyers to get properties under the asking price. And I've seen that a lot with a lot of my buyers we've put under contract recently. We've also seen that interest rates have popped up a little bit instead of continuing their trajectory down, most likely because the Fed feels that they want to really get a hold of inflation, and also because of this election and worries of more inflation with all of these Trump tariffs. They could basically create more hyperinflation for us because the cost of goods might go up, is a reason why we may have seen those rates pop up again. Now, this will be a battle to see what actually happens with interest rates because we have seen job reports coming out saying that the economy is doing great. In my professional opinion, I think that those job reports are somewhat skewed. And what I actually think is going to happen is that in 2025, a lot of those people that they hired for seasonality reasons or hired for governmental spending during the election, a lot of those people are going to get laid off, and businesses are going to realize that they don't have as much money as they thought they had in Q4 and have to cut employees. And we're going to see those jobs report coming back revised and seeing that a lot of people have gone laid off, forcing the hand of having to drop interest rates, which could push prices up. But I don't think that would come into effect till probably Q2, Q3. We'll see rates come down slowly, but not as fast as we thought. So I think we're going to trade sideways, slightly go up, but we're not going to see anything going bonkers like Bitcoin or seeing any sort of market crash, simply because there's not enough inventory and demand to balance both of them out. So I think we're going to trade sideways for a couple months here and probably see it start to increase again Q2, Q3 once interest rates start to come down. So what should you do if you're a buyer and if you're a seller? If you're a seller, if you don't have to sell, I would suggest holding off. Because of the election, a lot of people not knowing how these Trump policies are going to affect the real estate market, a lot of people are kind of just holding off when it comes to being a buyer. Also, not knowing what's going on with interest rates. They came down, but they went up. So a lot of buyers are a little confused right now. And then again, with the seasonality and the holidays, a lot of people aren't shopping right now. So there isn't that much demand, which is kind of keeping things trading flat or going down slightly. So if you're a seller, if you can hold off, I would suggest holding off until at least Q2, Q3 of 2025. And if you're a buyer, I would say that there is a good opportunity right now to get properties on a discount. Now, again, you will have to swallow that interest rate. There's creative ways that you can use, either buying down points or using a 2-in-1 buy down, or even assuming a loan if you're a veteran. Those are some opportunities I see. But again, you'd have to swallow that interest rate for a few months until you can refinance. But But again, the scary part is not knowing where interest rates are actually going to go. And that again is kind of slowing down the market. So all these questions makes it a little difficult for anybody to make a decision. But what I always say is where there's chaos, there's cash. And I think right now there's a little bit of chaos out there, but that is really where the opportunities can be for you buyers out there if you're savvy with the way that you purchase it. So with that being said, that is your market update for December of 2024 out here in Oahu, Hawaii. If you guys have any questions or want to discuss any creative strategies in regards to buying or selling real estate out here, I would love to connect with you. I've got my contact information right here, or you can directly DM me on my social media platforms. Hope you guys have a beautiful day, and I'll talk to you soon. Aloha.